Thank you for joining us today. Good afternoon, everyone. The faculty development program sessions will commence shortly. Kindly make note of some general instructions to be followed during the course of the faculty development program. Kindly turn off your audio and video for better clarity of the session. We request your presence for the entire duration of the session. All your queries, questions, or comments could be posted in the chat box. A feedback form will be shared towards the end of each session in the chat box, which must be filled and submitted immediately without fail. If you leave the session without filling the form, the e-certificate won't be issued. Certificates will be issued to the participants within 10 days of the program. The sessions will commence in a while now. Please ensure to follow the instructions for an uninterrupted session. Good afternoon. Since we live in an age of innovation, a practical education must prepare a man for work that does not yet exist and cannot yet be clearly defined. Peter F. Drucker. On that note, on behalf of School of Commerce, Jain deemed to be university, I take immense pleasure.
Yeah, Yashaswini ma'am, I think sir got logged out. We'll wait for a couple of minutes.
Okay.
Yeah.
Sure.
Smita, I'm here.
Yes, sir. Thank you.
Yeah.
Good afternoon, everyone.
Good
Since we live
afternoon.
in an age of innovation, a practical education must prepare a man for work that does not yet exist and cannot yet be clearly defined. Peter F. Drucker. On that note, on behalf of School of Commerce, Jain University, I take immense pleasure in welcoming the August gathering for a 5-day international faculty development program in finance titled Financial Innovations for Holistic Development. Firstly, I would like to extend a warm welcome to Dr. Dinesh Neelkant, Director, School of Commerce, Jain deemed to be University. I would also like to welcome Dr. Subramanian M., Head Management Program, RL Institution of Management Studies, Madurai, Tamil Nadu. I also take this opportunity to welcome all the heads of various departments, coordinators, faculty members, and all the participants from various institutions. I also welcome the delegates from corporate world. Welcome everyone once again. Jain deemed to be University has always strived to be an intellectual institution that houses students from more than 38 countries in this hub of knowledge to learn and better themselves. Our university takes pride in providing not only quality education to students, but also in catering to the overall development. Empowerment of students, enhancement of values, and enrichment of academics and research has been the hallmark of School of Commerce, Jain deemed to be University, for nearly 3 decades. The constant innovations nurtured in its various spheres of functioning, which include global tie-ups such as ACCA, CIMA, CMA, CIPS, etc., and entrepreneurial learning practices like student immersion programs, entrepreneurs on training and business simulations, amongst others, have characterized the growth of School of Commerce over the years. School of Commerce has a dynamic set of experienced and research-oriented faculty members who draw students from various countries towards a key learning environment. A 5-day international faculty development program revolves around the theme of financial innovation for holistic development. Financial innovations emphasizes to optimize the design policy, adapt action mindset to achieve global peace and sustainable development. Financial innovation can be fragmented into definite categories based on updates in various domains of the financial system. Hence, the need of the hour is to explore novelties in financial literacy, financial markets, financial services, and financial processes. This FDP aims in revisiting the financial literacy, learn stock market implications, assess corporate valuations, assess microcredit, and associate with fintech operations right from evolution to revolution. The FDP is planned and executed by Faculty Research Cell, Samshodhana, School of Commerce, Jain deemed to be University. Samshodhana is instrumental in encouraging and providing a platform for research to all the aspiring scholars in the field of academics. It is also instrumental in organizing conferences, seminars, workshops since its inception. The 5-day FDP is structured as follows. Day 1, a session on Fintech Evolve to Revolve by Dr. M. Subramanian. Day 2, that is 13th October 2020, a session on revisiting financial literacy by Dr. V. Mary Jessica. Day 3, a session on secrets to become super rich by C.A. Rudramurthy BV. Day 4, a session on microfinancing and women enterprises by Dr. Dilip Kumar Mohan Chandran. And day 5, that is 16th October 2020, we have a session on world of valuation insights into the mind of Warren Buffett by Dr. Nasra. I take immense pleasure in introducing Director, School of Commerce, Jain deemed to be University, Dr. Dinesh Neelkant. Sir has a career spanning over 3 decades in the field of education with marketing management as a specialization. He has a doctoral degree from Mumbai University. Under Sir's leadership, the centers that he has headed have risen to greater heights as his focus is on providing effective academic leadership roles to his faculty members And it's no exaggeration that over the years, he has also been a torchbearer to many students, astronomical in number. I now request Dr. Dinesh Neelkant for the inaugural address and herald the beginning of the 5-day International Faculty Development Program. Sir, over to you.
Thank you, Yashaswini. I hope I'm audible.
Yes,
Yes.
sir.
I hope I'm audible. Yeah. Okay.
Yes, sir.
First of all, on behalf of Jain University School of Commerce, I welcome you all to Samshodhana, the research cell which continuously does activities on the lines of faculty development program, on the lines of webinars, and a lot of learning has happened because of Samshodhana. So we are really happy with it. Second part of it is I want to appreciate the efforts of Professor Smita and all her colleagues who have put such a wonderful event in front of us. And I also want to thank Yashaswini for doing such a wonderful introduction. Now, coming back to the topic is so relevant, and I really want to even appreciate the panelists, the experts who are there and who are going to deliver their keynote addresses on the topics. And in spite of the busy schedule, they have made it. So thank you once again. From coming back to the point is that in today's world, in this COVID situation, this topic is becoming really apt. There is absolutely a need where you have to know what are the innovations in all the areas. It's not only finance. So finance is not an exception, and therefore all the finance teachers coming together and developing their knowledge is really going to contribute a lot to them. And when we have such experts who are really going to train them on this, I am very sure that the student community will definitely benefit out of it. In this situation, when we talk about finance, I can give you a scenario in the corporate world that the resources of funds have become less, the demands of the employees have gone high, the sale of the products or the services has gone low, and everybody wants their cup of tea. And in all this, you find that the role of the finance guy who is in the company, he should go to Tirupati. Because actually speaking, what I'm supposed to do, I really don't know because I don't have funds. How I'm going to do this? The companies which were really good, they have some reserves. The companies which were living on the edges are somehow managing, and the company which were running in losses have literally stopped. So you find that at this juncture, we have to understand that where are we going to stand and how are we going to learn this so that we can tell the students, look, there can be something like a COVID which can stop the universe. And at that point of time, there's something called reserve, which always comes to you. A time was there when people used to say that the modern economy says that you spend a lot. Okay, and your traditional economy says that you have to save a lot. So if you look into your parents, you'll find that they had a tendency towards saving. We all have a tendency towards spending. So that tendency of saving was perfect because that is helping you. And now in this innovations of finance, it is very important for you to understand that how saving is going to become again the key. Trust me, this COVID has taught us that let us go back a little bit orthodox and you will find all your answers. So that is where I feel in this innovation strategy of finance, all the experts will definitely throw some light and guide us that how with a small amount of money, maximum can be achieved. Over to Yashaswini. Thank you very much for joining us. And I'm sure that you will definitely gain some insights, all the participants. And again, thanks to all the experts for joining us. Thank you. God bless you.
Thank you.
Thank you, sir, for launching the 5-day International Faculty Development Program, and also my heartfelt gratitude for those words of encouragement and emphasizing on innovation in many aspects of teaching and learning, and finance particularly. We now move on to the first session of the Faculty Development Program. I deem it a privilege to introduce today's resource person, Dr. M. Subramanian. Dr. M. Subramanian, an alumnus of IIM Ahmedabad, has over 23 years of experience in industry, academics, research, and consulting. Pursuing postdoctoral fellowship at Lincoln University, Malaysia, he is also a doctorate in finance. Sir has many degrees to his credit and diplomas to his credit, like FDPM, MPhil, MBA, MFC, MA, PGDMM, and so on. The list goes on. Presently, he heads the management programs at RL Institute of Management Studies, Madurai, Tamil Nadu. He was earlier the Pan-India Head of Financial Services and Business Analytics domain, iNurture Educational Consultants Private Limited, Bangalore. Spearheading a 100 million business portfolio. He has worked for companies like Vardhaman Threads, Big Shop Group of Companies, Kumudam Publications, and Janalakshmi Financial Services in various positions, which includes top management position as Assistant Vice President. He is SEBI certified financial educator, SEBI certified research analyst, NSE certified investment analyst and portfolio management. He is a certified blockchain specialist and a certified design thinking specialist. He has also served as teaching faculty in various premier business schools and institutes like Amity University, Noida campus, Institute for Technology and Management, Tyagraj School of Management, and IIM New Delhi. He has published and presented more than 40 papers in various national and international conferences, and has also won many Best Paper awards. As a researcher, he has published and presented management case studies and has also won Best Case Study Award. He is an accredited trainer, consultant for NTPC, SVJN, Power Grid Corporation, NISG. He trains the top management executives on the enterprise risk management, leadership development, finance for non-finance executives, and financial engineering. He is a ACCION USA certified international trainer on leadership skills for mid-level managers. Sir has, to his credit, been cluster coordinator consultant for YES, that is Young Entrepreneur School, Madurai, Tamil Nadu Chamber of Commerce. He is a regular trainer and faculty at Institute of Company Secretaries of India and Institute of Chartered Accountants of India on soft skills, capital markets, and strategic management. He is a regular trainer and faculty at LAICO, Arvind Eye Hospitals, Madurai on finance for hospital administrators, which is an international management development program. He is also an active business quiz master and conducted various business quizzes on Pan-India. Without much ado, I request Dr. Subramanian M. to address the keen audience on Fintech Evolve to Revolve. Sir, over to you.
Thank you, Keshwani, and let me thank the organizers. My credit and thanks to Dr. Shivaranjani, who pulled me out for this program. Thank you, Shivaranjani. And I thank Pratibha Vikram, who also interacted with me for this program. I thank the entire faculty fraternity at Jain University School of Commerce and Management Studies. Thank you all. Without taking much of your time, let us go on to the presentation. Already, I think it is 3:20. So I've been given a task of 90 minutes. Let me try to do the justice for the topic being given to me. So, I trust my screen is visible to you all now.
Yes, sir, we can see that.
Right, thank you. So, Fintech evolution to revolution, that is what we are seeing today. That is what I thought to share my views and ideas about this. So, as we are driven by the OBE method of teaching and learning, let us also do the session as it is FDP. The session objective was set to impart the process of evolution of fintech to the revolution in India and worldwide. That is what I thought it would be apt, and there is an outcome for the session. The outcome expected is at the end of the session, the participants will be able to comprehend the process of evolution of fintech and revolution in India and worldwide, and appraise the contemporary development, what is happening in the fintech domain as a disruptive innovation. I used to call fintech as a disruptive innovation for many reasons. During the course of discussion, we'll understand why I am saying this is a disruptive innovation. So, world of finance before fintech. So before fintech, how it was, that is what the discussion I thought to take it for today. So I'm classifying the world of finance before fintech like this: the pros, the pre-fintech era, and the cons, post-fintech era. Let us have a discussion over this. After that, let us go and have a bigger discussion on how do we take this topic further. So let me take some views from the participant. What kind of pros and cons we had during the pre-fintech era and post-fintech era. So let me first take the views from participant. What kind of pros we had the pre-fintech era? Yes, fintech has given us a lot of benefits. We'll be discussing that later. But there were some pros, positive sides of pre-fintech era. What are they? I'm yet to get some response.
Sir, participants are muted.
Yeah, I know that. I'm looking at the chat box. No technical glitch earlier. So there is somebody, Nusrat. Yes, no technical glitch. A person without IT knowledge were able to easily operate. Okay, good. Anybody else? More points, more participation, as it is a post-lunch session. They had to win the boredom. So participation is the only way. Come on, chat box is open. Earlier it was open to frauds. Okay. Maitri, thank you. Illiterate people could take part earlier. Thank you, Pradarshini. Good one. Then, more secured in banking transactions, inconvenience. Kirtana says it's inconvenient. Okay. No easy flexibility. Physical evidence was there. Slower. Pre-fintech era had more trustworthiness. Good one. Transparency was there. Okay. Personal banking. Good points. Disruptive technology, perfectly fine. Less transactions earlier. Okay. Thank you. Thank you all for contributing your views. Competition was less, to access to finance was difficult. Low cost. Thank you, Dr. Raji. Low cost of operation. You're right. Right. Let me try to take it in a simplified way, whatever you have said. First one, do you all agree with that? The personal touch was there during the pre-fintech era. That was one of the pros. I want to talk about the pros, then we'll go for the cons for the post-fintech era. What has happened? The personal touch was there. Banker knows me personally, that was there. It is nothing to compare pre-fintech was good and post-fintech was good, bad. So we are trying to make a balance between these two, and we are going to lean towards fintech. That is what we're going to do today. So the pre-fintech, what kind of positive side I'm seeing? Personal touch was there. Definitely bankers were able to recognize us, and we are able to recognize the branch managers and bankers. Today it has gone down. It is very weak. But what about the con? Lost the personal touch in banking and finance, which is very key. If you see banking and finance, the personal touch one-to-one is much more required. If you want to have a trustworthiness, check the integrity, definitely the personal touch is much required. I think in post-fintech era, we are losing because we never visit the bank branches, or we never go for any financial transaction. We do everything online today. That personal touch has gone. Okay, one side it is saving time and it is convenient for us. That is all right. I do agree with that. But the personal touch is one aspect which is the pros, the pre-fintech era, and that is the cons during the post-fintech era. Another one side I want to say, the scale and number of financial frauds were less comparatively. Before the fintech era, everything was online, everything was offline. So the scale and number of financial frauds were less comparatively when compared to now. We have never heard about somebody phishing our account and taking away money. Earlier it was not happening. But today I'm able to see every alternate day there is a report from RBI. These number of accounts have been fished out, and these number of credit card frauds and debit card frauds. This number of transactions have gone online for the online fraud. So the scale of number of financial frauds were very less earlier. But today there is a multiple fold rise in financial frauds in today's fintech regime. I hope we all agree with it. So the world of finance before the fintech, how it was. And finally, let me close with this, and after that we'll move ahead. Limited financial products and services, it was easily understandable by public. Many of us, many of the previous generation was easily able to understand the financial products and services, what is being offered. It was very easy for understanding. But today, because of the advent of fintech and a lot of innovations in finance, what is happening? Complex financial products and services, difficulty in comprehending those products and services. Because of this, what is happening? There is a mis-selling in the market. Many a time, very easily I can say about that insurance. Almost in today's market, the survey says, the Deloitte survey says about Indian insurance market, 79% of insurance product are missold. That means they are selling it for the wrong person for the wrong reason. It is not for the right person with the right reason. At the end of the game, many people may not know what is the purpose of this insurance, how much they're going to get. If the clear-cut understanding is not there, mis-selling is happening. So the complexity has gone up. I just told insurance as an example, but mis-selling is happening, complex financial products and services. This is what I thought to show it to you as a pros of fintech era and what are the cons of post-fintech era. This is the picture now. But what way we are going to go further, where this fintech is leading all of us, that is what we're going to discuss it now. I trust that is what the game. Evolution of fintech, how it was and what was happening there. Here it is, the picture from 1950s till 2019-20 we have taken. So in 1952, Diners Club introduced the first universal credit card. That is the first revolution or the first thing which happened in the fintech. And next to that, in 1960s, in the mid of 1963-64, the world's first ATM was installed by Barclays. Again, every move is towards moving towards tech savvy and technological advancement. NASDAQ, National Association for Securities Dealers Automated Quotation, the first exchange, electronic trading exchange of the world, was introduced in 1970s in US. So again, another one biggest move we made. And after that, E-Trade launches for the first time online brokerage services. We started because NASDAQ has started the service. Now they have started for online trading service. Online telebanking was introduced in Britain. So both happened parallelly. In 1980s, we were able to do this. In 1990s beginning, you will not forget, I think India also moved towards the regime of SEBI, and we also moved towards online trading from 1994 onwards through the advent of NSE. At the end of 1990s, we were able to get the PayPal. It makes a debut. We know what is the purpose of PayPal. And Stanford Federal Credit Union is the first online banking website in US in the early 90s. 1993 they introduced it. So these are a big revolution. What happened in fintech? Again, to be very critical and to be very what I can say open. During 2008-9, we started launching the bitcoins, the much spoken cryptocurrencies. So today we know cryptocurrency has not been recognized in India as of now. Still it is in nascent stage. In many states, they have not recognized bitcoins are like cryptocurrency, but still in nascent stage. We know that after 2019, we started having lot of disruption happening in the market. Alibaba came, they disrupted the market. Fintech startups started making a lot of apps. And today we can see India is one of the leaders in fintech. When world over, the online payments are happening hardly 24%. And on finance apps are used by people 39%. In India today, the financial app and online apps are more than 50%. We are the market leaders in finance apps and banking app. And in 2019, digital only banks like N26 creates an industry disruption in US and Western markets. In India, we have seen all the banks have moved towards core banking system during the early 2000, but it took 15-20 years for us to reach the complete reap the benefit of online banking. So that is the total journey of this evolution of modern fintech from 1950s to 2019 that has happened. So fintech conceptualization, how it happened and what happened. Here is the perfect picture of it. It is a pic released by Deloitte. So one side the finance. When I say finance, banks are there, payment banks are there, payment companies were there, NBFC, non-banking finance companies were there, securities and broking companies were there, wealth management companies, distribution, security distribution company or the financial service companies were there. The other side, we have hardware providers, software providers, cloud providers, and platform providers. Now these two have joined together and we are able to make a new platform called fintech. So technology-driven finance or finance enabled through technology or IT, we can call the coined word fintech came here. We have umpteen example for both the side, from hardware, software, cloud to platform, and the other side banks. Almost many people have taken part in this journey, right? So how does the fintech ecosystem works for us? So if you look into this particular picture, this gives you a lot of idea. One side, let us, or the left side bottom, you can see the individuals and organizations, the financial customers, the base customers who are the key drivers for the financial ecosystem, right? On the other side, we have the traditional financial institution like banks, insurance companies, stock markets, stock brokerage companies, venture capitalists, private equity people, angel investors. So one side the individual organization, other side the banks and insurance. So once the individual make the movement of money either from bank to their pocket or their pocket to bank, definitely through online mode, the fintech starts. When the fintech starts, definitely we need the support of the startup companies or the technology towards enabling the customer and the institution. So there come the fintech startups or technology part. Again, when they say technology part, we need to have technology in terms of cloud computing and how to manage the data. And the other side, we have financial regulators who has to oversee all this fintech. So the fintech ecosystem is beautifully made up in India, and it is working in tandem. So no doubts in that they are working in tandem. But still, my view over the fintech today, we need to have stringent fintech regulations. Still, India is in nascent stage in fintech ecosystem and fintech regulations. We need to go a long way. I think India has to learn a lot, and we have to implement a lot in fintech. Though we are market leaders in many of the financial fintech avenues, but we need to go a very, very long way. So what kind of fintech segments we have? What kind of fintech segments we have? That is very important. So here I have put down a list of fintech segments. One is digital payments, the electronic payment solutions covering both remittances and includes enterprise payments. So digital payments either starting from paying through your wallets or paying through your cards, that too without swiping the cards. We have seen the digital payment system. There is alternative lending. It is a technology-enabled solution for alternative credit scoring. Especially this platform is made for the MSMEs. When I say MSME, micro, small, medium enterprise, they have made it. Then there is one segment called InsurTech. It is the classical, what I can say, solution for new technology to expand the distribution of insurance products. It is happening today. Because of advent of InsurTech-like products, we are able to synchronize a lot of things into one basket. That one demat account is going to showcase everything, every financial hold, every security holding office. Then called investment tech. It is classical investment technology solution significantly for investing and personal wealth management. Almost all the stockbroking companies have started using the same platform, using artificial intelligence. Today we have gone for even algorithmic trading and artificial intelligence enabled trading. We are also making a lot of advancement in trading, security market trading by advent of artificial intelligence and algorithmic trading. RegTech refers regulatory compliance. Whatever fintech compliance we have, we are going to work it out through the regulatory compliance, the RegTech, regulatory technology, regulatory tech, whatever we have. And finally, the bank tech, it is basically the banks are moving towards RPA today. When you say RPA, robotic process automation, started by HSBC in India. Now HDFC have started using robotics in regular banking counters. When I say using robotics in regular banking counters, instead of having tellers, the banks have started using the robotics for reading the checks, passing the checks, distributing cash. For attending the regular customer queries, they started using robotics, and the robotic process automation also started in the banks and financial service sector. Right? This has happened as these are all the segments we have in fintech. Whatever I'm showing it to you is just a glimpse of it. We'll be going for deeper discussion into the fintech now. So the Global Fintech Report 2019 released by PwC says something. PwC's survey found that 47% of TMT. So what is this TMT? Technology, media, telecommunication. So they are the larger group of companies and sectors who are using the fintech a lot. So 47% of technology, media and telecommunication, and 48% of FS, financial service organizations, have embedded fintech fully into their strategic operating model. If you ask me, India is a pioneer in it, excepting few multinational companies. India is a pioneer in it, because if you look into the technology part embedded in financial services, better than India, I don't see any other country utilizing this. If you'll be surprised to see the services of a payment company like PhonePe or Google Pay or Paytm like companies operating in abroad, you'll be surprised. 44% of TMT, when I say TMT, technology, management and telecommunication companies, and 37% of financial service organizations have incorporated emerging technologies into the products and services they sell. this is globally. If you ask me in India specifically, it is 53% of TMT and 49% of FS companies have done this in India specifically to know about the fintech. Another one important aspect of it is all about FS and TMT should look into each other to retrain to fill skills gap. The biggest challenge today is finding out talent pool. The survey of PwC says that 80% of the technology, media, and telecommunication, and 75% of FS organizations are creating jobs to fintech. So, if somebody specializes in fintech, where do they want to end up in job? Either in TMT segment or in FS segment. So, at 42% of both TMT and FS are struggling to fill these roles because they don't find the right persons. They don't find the right executives. That is why nowadays you will be able to see umpteen amount of institutions are offering courses on fintech. Umpteen amount of courses are being floated in terms of catering to fintech and security, online payment securities and all. So that is what happening today. There is a huge gap in the market. Might be in 3 to 5 years time, the demand will be in peak, and if you are able to qualify yourself in fintech, you'll be able to cater to the needs. 73% of financial service organizations are hiring from technology sector. That is very important. Many of them are from education institutions today who are participating in the seminar. You should know 73% of FS organizations are hiring from technology sector, and only 52% from TMT firms are looking to recruit from FS, and vice versa. But what I'm trying to say that your recruitments are very high if you're doing some fintech programming. So this is one. Upskilling is required in terms of this fintech. That is one. So here, look at this exhibit very keenly. Technology leaders, that in your opinion, which technologies are set to transform the way financial services are delivered within next to 2 years time? When I say next to 2 years, maybe in 2022, 23, what are all the things? The top notch thing, what TMT feels is about IoT, whereas the top thing, what the FS domain thinks is about big data. Because finance work with big data, whereas they work with IoT. The second top most important for TMT is artificial intelligence, but the topmost for the finance is FS. Why? Because starting from banking transaction, stock market trading, algorithmic trading, doing robotic process of automation, artificial intelligence is going to be used in banking. So you can see the split up where we have more scope. This one particular data gives you enough information where it is going to be. Again, blockchain, you can see TMT as well as FS, both are 40%. So what I'm trying to say, look at the trend where it is evolving. It is a revolution happening in the market. From evolving, we are going to make a revolution in next 2 years time. So we need to train our students. We need to tell our students to get certified in IoT, artificial intelligence, big data, blockchain like things, if they want, after equipping their core skills. So after equipping the core skills, these kind of value-added skills will take them to greater heights in fintech platform. So you can see the next one. This is very key again. What do you think are the most important areas of customer retention in the context of emerging technology? It can be artificial intelligence or robotics or IoT. So if you look into this, right, in financial service sector, ease of use, when people use an app or people use a technology, whatever you're going to give it through fintech, ease of use will be the topmost thing for the customers. Whereas in the TMT segment, personal digital contact, because they're into technology, media and telecommunication, the personal digital contact is very key for them. So people in both the segments say that 24/7 accessibility is also a key segment. So that is why what is happening, these kind of ratings are there. So again, this picture is giving you a clear-cut idea where this fintech is going to serve the companies in retaining the customers using the technology. So I can say it could be personalized service, trust building, or 24/7 accessibility, the product design. So here are the few things what fintech can do to the companies for the customer retention strategies. Again, here I'm throwing some lights on what are the major challenges to fintech growth. Because when I say from evolution to revolution, we should be able to see, we should be able to identify and understand what are all the challenges we have to grow. So if you look into the top 3 in technology, media, and telecommunication, the number 1 reason for technology, media, and telecommunication, as well as to the financial service, it is security, compliance, data privacy risk, and the related issues are a concern for both. We know that many individuals' data has been stolen from financial data house or from the telecommunication data house. We have seen that your phone numbers might have been hijacked. You will suddenly get a message. Suddenly you will get messages that your account has been hacked or your money has been transferred. So the security, compliance, data privacy is the basic or the major challenge for both the industry. Why? Because we are talking about this. These two industries are hugely involved in fintech. When these two industries are involved, the major challenge for them is on security, compliance, and data privacy. So that is where making up the rules and regulations and making up a workable solution towards this will be the top priority. That is the major challenge for both the TMT as well as FS companies. The next challenge for FS and TMT slightly varies. For TMT, technology, media, and telecommunication, regulation is limiting to our ability to implement the right solutions. That is one hinder. If they want to introduce something new, it is not that easy. Again, there are a lot of complications in finding out the solution and implementing it. That is a major challenge for TMT companies. On the other side, for the FS companies, we have too many legacy terms. New system risk adding complexity. Yes, that is a major challenge for the FS segment. The third major challenge is, it is what I can say, swapped here. It is the same thing what FS had as a second challenge is the challenge here for the TMT companies. So the basic challenges remain unresolved in many of the fintech companies. Now, what scope we have from evolution to revolution, what scope we have as a revolution, if we are able to adapt to the fintech technologies and we are able to find solutions and we are able to provide some direction toward these challenges, definitely the scope for further growing in our career as well as finding out innovative products and ways and means in fintech will be much possible. That is what I recommend. Right. Most organizations are looking to collaborate with the firms in their own sector. When I say TMT wanted to collaborate with the TMT company alone, financial service want to collaborate only with the financial service company alone. If you can look at the chart, almost 78% of the TMT company collaborate only with their own fellow companies. Again, financial service company with the financial service company. Vice versa is not happening. You can look at here, TMT company using financial services 46%, higher than the financial service using the TMT company. I'll tell you the reason. The telecommunication companies today have started their own payment system. When I say their own payment system, Airtel Payments Bank is there, Vodafone M-Pesa is there, Jio is having their own payment system. So telecommunication companies are adapting to the financial services, whereas the FS companies adapting to the TMT is low. But we'll be able to see that what kind of cross learning they're able to make it, what kind of cross learning they're able to make it, what kind of cross utilization they're able to make it here. It is very, very obvious here. Right. Uh, Now, I want to take you to the Indian fintech scenario. Uh, when I say the Indian fintech scenario, how it look like, we'll go one by one. The first challenge or the first thing what we are going to make it over there is quite different. Let us discuss one by one. Right here it is. Um, it is a combination of steady economic growth with low penetration of financial services. That is what the major point there now. Right. What do you mean by this, and how do we handle it? So India's GDP is expected to grow at 6 to 8% for the next decade. When I say next decade, for the next 10 years time till 2030. Thus, the driving income and consumption levels of households as well as business, we have to see how much it is. Coupled with low penetration of household credit in tier 2 and tier 3 cities. So that is a big challenge for us. Tier 2, tier 3 cities, low penetration is there because people are intending to move towards tier 1 cities. So tier 2, tier 3 cities, they are able to see low penetration is there. So because of it, what is happening? There is likely to be a lockdown in the tier 2, tier 3 cities. There is a growth because of this. The further improvement in digital infrastructure outside urban and metros will drive the adoption. Otherwise, it will be a major challenge. The second major point is all about the large public sector banks and insurers lagging market growth. When I say they are lagging market growth, on aggregate basis, the public sector banks and insurance firms are gradually but continuously losing market share to private banks and insurers respectively. That is happening in the market. Excepting one or two banks, we are able to see this. That is why government also has moved towards consolidation of banks today. A consolidation of banks today, they thought that they will be giving them result. We have to wait and see, at least for next 2-3 years, what is happening in the market. That is why I trust that all the people who are attending may know about one concept called too big to fail. There is a concept introduced by them called too big to fail. When I say too big to fail, these kind of banks are too big to be failing in the market. There are 3 banks they have identified till now. Number 1 is State Bank of India. Number 2 is a private sector bank, ICICI Bank. And number 3 is HDFC Bank. These 3 banks are called as too big to fail banks. But we have to see how they compete in the market in the coming days, because the landscape of banking is changing because of changes in the structure of government banks as well as changes in the fintech space. So from just evolution, it is becoming a revolution in the market. So because of this, banks are competing with each other to grow. So due to their inability to outgrow in the market, the public sector banks are finding a lot of difficulty. So, but we have to understand, still public sector bank holds 70% market shares in deposits and trading. That is to be recognized a lot. Going forward, definitely new private sector banks, including differentiated banks, are likely to be the beneficiaries of emerging market opportunities. When I say emerging market opportunities, I'm talking about payment banks like banks. When I say payment banks, umpteen payment banks have come in the market today. And emerging fintech players in the areas of payments are there. Paytm is a payment banker as well as a fintech company. Similarly, we have payment banks in the market, which is making a disruptive role. So we have to see what kind of trade-off happening. The third point is all about regulatory framework, what kind of changes it is happening in the market. So regulatory forbearance toward fintech. What kind of regulatory forbearance towards fintech is happening? Indian regulatory authorities, including RBI, SEBI, and IRDA, have adopted an accommodative stance. I will agree that Indian regulators have taken a very accommodative stance for the fintech sector without bringing any prohibitive guidelines to over-regulate the sector. That has happened. So none of the regulators have stopped it, but still, as we are in the nascent stage, We are trying to catching up with the rapidly evolving ecosystem. Indian regulators have adopted a consultative approach and have been proactively foreseeing the need of adequate regulations, and they're trying to make it, especially in the areas of concerning public funds, peer-to-peer lending, P2P lending or P2P lending, crowdsourcing, crowdfunding, and alternative currencies like cryptocurrency. They're very, very cautious in approving and allowing. That is one point to look into. And the next major point is about Indian millennials rapidly ascending to the adoption of S-curve of digital financial service and thus perceiving higher friction from incumbents. So the millennials or the kids of 2K, they're able to easily adapt to the new system. Yes, Bhumika.
Ma'am, can she be unmuted? Bhumika?
Yes.
Bhumika has raised the hand.
Sir, maybe there is some glitch.
Ma'am, I think mistakenly, ma'am.
Okay.
Yeah.
Okay. Sir, I think that was mistakenly. You can continue.
Okay. I'll continue. So Indian millennials are adapting to a S-curve financial service, and thus what is happening is there is a lot of friction happening in the market. When I say a lot of friction happening in the market, the tendency of the new millennials moving towards the new fintech is happening. This will create a disruption in the market. The next one is India's stack and internet data proliferation to improve financial service utility infrastructure and connectivity to support digital financial service. Still, India faces challenges in the 4G technology. The internet data proliferation is a big challenge. There was one concept which was discussed much more some time back. I trust you all might have heard about net neutrality. The net neutrality has been taken by many companies. At that time, many companies had a full stop for it. This cannot happen. So what is happening now? Net neutrality is not there in India. There are few select cities who have 3G and there are few select cities who have 4G, and there are few select cities and rural area where even we are not even having the 2G connections properly. If that is the case, the penetration of internet data is very huge in India. The slowness of data is going to be a big challenge for the telecommunication company to manage the fintech revolution. That is the biggest challenge we have. Advances in technology and adoption of cloud services leading to asset-light models with almost zero unit cost at transition levels could enable subsidization without building a scale. What I'm trying to say here, when you advance in a technology, the cloud services leading to asset-light models, because data storage has become very light, we are moving to the cloud technology model, and with almost zero unit cost, we are going to make it. That is where the technology, media, telecommunication company can play a very big role in fintech to help the financial service segment. That is happening now. And finally, I want to close it with this, how the scenario is. The low real interest rates in Indian economy. When I say low real interest rates in Indian economy, we might have seen in the last 1 or 2 years time, the market rates are rapidly changing. The fixed deposit rates in the market banking sector is not beyond 7 to 8 percentage, 7.5 to 8 percentage. That is a big challenge. Because of this, the financial services segment has found an alternate space. Instead of banking, use banking for other financial services. That is happening. This is going to turn around the banking into a next bigger level. Right. what way ahead we have in fintech to go. So I would love to have a lot of discussion. That is why I'm finding my way here. Financial institutions are far more likely to collaborate than compete with fintechs, yet often struggle to interact effectively with the faster paced, less structured fintech world. Instead of competition, instead of simple collaboration, we call co-optation. Competitors collaborating with the competitors, and competitors collaborating with the technology providers. Co-optation is going to happen in the market. That is the way we are going to work in the future. These incumbents often lack clear path of fintech for fintech approval and development, and struggle with setting benchmarks to measure success. That is again a point, a way ahead. What is happening now? As still we are in nascent stage. We are not even 3-4 years old in fintech. Imagine what was the impact of fintech just 4 years back, before the demonetization. How many of us were compulsorily having a digital payment system on our phones and on our mobile phones and systems? We all were doing the transactions going to the bank. The demonetization, thanks to demonetization, pushed us towards digital payment system, promoted digital payment system. Today we are standing. But just 3-4 years old, it is not possible to find a clear-cut way. Let it be the regulators or the users, or both are in the nascent stage of finding a trade-off between these two. The next one is all about, to overcome these barriers, the incumbent should be implementing a fast-fail approach to fintech experimentation. Fast-failing approach, nothing wrong in doing it. When we are going for a disruptive innovation, I don't find fast-failing approach should be allowed. Because we try one approach, we fail it at the faster pace, then we'll be able to adapt to the next one. So the fast-fail approach for the fintech experimentation should be allowed, and establish a precise engagement path with a single point of initial contact. That we have to create. I think Indian government is creating that particular point. RBI and SEBI both are working towards a single point agenda about fintech, how they can integrate together and allow the companies in a better way. That is also happening in the market now. And the next one is, for their part, fintechs must refine their pitches to align to the real world challenges and demonstrate both industry and technical expertise. What is happening now in fintech? We are trying to find an ideal solution. When I say ideal solution, ideal solution may not be the ideal one at all times. That is one popular saying. All popular solutions need not be right, and all right solutions need not be popular. So when these two sayings go hand in hand, we have to find the fintech solution to customize the solutions to the challenges. Instead of giving a platform and work on that, I recommend, or we recommend, fintech companies to be customizing all the solutions to the requirement. That is one required thing today. And finally, going forward, consolidation is the key, as fintech see more traction in an increasingly competitive market, and financial institutions look for more sophisticated partners. So consolidation will happen. Right, left, center consolidation will happen. Number one, what has happened now? Banking consolidation from government banks, they have started. Next round, big fish eating small fish. Big private sector banks will start eating the small private sector banks in the market to compete with the government's move. Definitely that is going to happen. First, if this happens, the next thing to happen is these banks and financial institutions will start collaborating or co-opting with each other. They will find the technology partners. They will be trying to find out the sophistication partners. When it's a sophistication, partners with artificial intelligence background, partners with robotic process automation background, partners who can do algorithmic programming for the financial services solution. So the collaboration will happen a lot, and fintech revolution is going to still go in a bigger way in the coming maybe next 5 years, 10 years. We'll be able to see a bigger way. One more thing to add on to this fintech. Moment we talk about the fintech, the next big wave has already started in finance. So we are still talking the nascent stage about the fintech and solutions what we have. Please make a note, watch my words. There is another big word happening in banking and finance. It is quantum banking, quantum finance. As like quantum physics, we are going to do quantum banking and quantum finance. That is the next big wave which is going to happen. Watch my words, definitely quantum finance and quantum banking will be the next big word, buzzword. Along with the fintech, it is going to disrupt the market in a bigger way. Maybe in the down the line in next 3 to 5 years time, maybe 2025, 26, we'll be able to see a lot of changes in the market. Instead of petrol, diesel vehicle, we're going to have electrical vehicle, EVs there in the road. Definitely the payment system, whatever we have, or the financial ecosystem, whatever we have now, will be having a complete revamp, and we'll be able to have a new fintech ecosystem and financial ecosystem. Why? Because we have fintech revolution going to happen in the next 3 to 5 years time. Might be in the same contemporary period. I'm expecting the quantum banking and quantum finance to pick up and do a lot side by side. We have to start mitigating the risk what is going to come newly out of this. So when I talk about the technology, tech savviness, quantum finance and quantum riskiness, we should also practice side by side the risk mitigation policies. We should also incorporate risk mitigation courses and subjects in the universities and colleges. So both should go hand in hand. But what will happen? The kind of courses, the kind of design what we have today may not work tomorrow. Because when it completely goes in tech savvy way, the kind of challenges what we're going to have is completely different. It will not be the same way. We have seen many teachers might have seen 6 months back they were going to classrooms and handling classes, and today they're handling classes online. So what kind of challenges earlier teachers had and what kind of challenges students earlier faced, still now faculties and students are facing a lot of challenges in this new platform, the new normal, we call new normal. But challenges are there, it is unresolved. We are trying to combat and we are trying to find out new ways and means day by day. Typically, these fintech environment and these quantum finance like subjects are going to make a revolution in the market. That is for sure, right? Still we have 20 minutes time. I would love to answer to the queries at least for the 10-15 minutes time. So open the forum for queries. I'm going to see the chat box.
Thank you so much, sir, for those enlightening words. We now move on to the question and answer session.
Yeah.
Participants, we request you to switch on the video for the question and answer session as photographs will be taken. Please post your questions in the chat box either on Zoom or YouTube. Selected questions will be asked on your behalf. We request you to fill the feedback form within the stipulated time mentioned in the chat box, and the e-certificates will be sent in 10 working days via email. We are now open to question and answers.
Good afternoon, sir. I just wanted to check with you. You just discussed about the way ahead. I would like to know what would be the impact on these smaller financial institutions like the cooperative banks that are very widely spread all across our countries. Hello.
Thank you for the question. Thank you for the question. The question is all about what will happen to the small players and cooperative banks like players in the market. The solution is only one. The small players has to adapt to the technology. or they have to what I can say, merge with the bigger company. That is the one solution. Number two, business consolidation. For the cooperative banks, Government of India has started making a separate move how to revitalize the cooperative bank. As a first step, they have brought the cooperative banks under the aegis of RBI now. The next step will be, once they make this move, they'll be able to monitor them effectively, and the cooperative banks also will be moving towards the fintech regulations. They have to adapt to this, adapt to the new regulations and new environment. There is no second thought for them. They can provide guidance. They're going to have a parent bank. That is what the proposal is made by RBI. Every cooperative bank will be having a tech-savvy bank with them. They'll be guiding the cooperative bank for the 5 years time till they get the expertise over the technology. After that, the cooperative bank will take over. That is what the solution as of now we have.
Okay.
There is
There's
one
one
question.
question.
Yeah.
How can rural India adapt to fintech?
Adapt fintech, rural India.
Adapt.
I'll tell you, rural India is faster than the urban India in adapting to the payment system. If you look into the ratio, the downloads or the app downloads or the usage by the rural India versus urban India, I don't find any difference. If there is 69% usage of payment system like Paytm or PhonePe or Google Pay, I'm able to find 58% of rural people also taking up that. Hardly the gap is 11%. Number one. Number two, training the rural people is very easy than the urban people. That is what I believe. Because I have done a lot of training programs. Urban people have a mindset, closed mindset that I know. They'll come with the mindset, I know mindset. Whereas the rural people will be open for learning and they'll be able to learn quickly. I'm able to see this when we are training a group of farmers in Karnataka. We are doing that. Near Chikmagaluru, we are doing that. We're able to see the difference that farmers are able to pick up the things faster than the urban Bangalore person.
Okay. So the next question, how can cryptocurrencies be used in economy?
Yeah, cryptocurrency as of now, that is what the $1 million question that everybody has. Cryptocurrency, we don't have a clear-cut policy. Many countries are not allowing the cryptocurrency. The point is, originator is not known. The concept is very good. Cryptocurrency, the concept is very good because they use blockchains. Blockchains are so safe, no doubt in that. The technology, what they use is so safe. But unless otherwise you do not know the originator and the purpose of the transaction, you're unable to process it. The currencies, definitely India will adopt to it maybe in another 2 years time, because now we have started studying at least. Earlier we are abruptly rejecting the cryptocurrency. At least now there is a special task team made for cryptocurrency study. Might be before the next election, this government may make an announcement about cryptocurrency, what they wanted to do. What is the impact of fintech on SMEs, small micro medium enterprises? That is the question I have. Definitely, I trust that MSMEs are fastly adapting to the fintech part. The classical example to you and me to understand. Today, the chai wala and the panipuri wala are allowing us to pay through PhonePe. I hope you all agree with this. They're allowing, even though the street vendors, they're allowing us to pay through PhonePe. Fintech has played a role there. They do, even though you take Panipuri for just 20 rupees, 20 rupees, but you are able to pay through the PhonePe and Google Pay. You're able to make it. Even when the street vendors are able to make it, I trust that SMEs, MSMEs will be able to adapt to the fintech environment faster. How far fintechs in India has been helpful in introducing climate risk stress? Yes, that is happening there because people visiting branches have come down. People visiting offices for financial transactions have come down. When these things have come down, definitely usage of what I can say, papers and paperless transactions have moved up. Definitely the usage of more office space have come down today. Because of these things, yes, definitely the climate risk stress has come down, but there is no foolproof study data with me right now, but this has an impact. The question is right. More questions?
Do we have any more questions coming in, participants? All right. With this, we come to an end of a wonderful session.
Ma'am, Chandramouli sir has raised his hand.
Okay.
Could you be unmuted?
Sir, please.
Hi there. I was, I mean, it was very interesting to know that, the latest details about fintech and everything.
Yeah.
Sir, I had a confusion between, what is payment banking system and fintech. Like,
Okay.
can a payment banking system can we call it as a fintech?
So
Or is
payment
there a
bank.
clear-cut differentiation between?
Okay. Payment banking system is a part and parcel using the fintech solution. Payment banking system itself is not a fintech, definitely, but payment banking system is using the fintech platform because their only aim is to enable payment and process payment. For example, Airtel Payments Bank is there. They don't accept deposits, but they allow only payments. Definitely, when Airtel Payments Bank is there, they're using the fintech platform to enable this payment. Both are different, both are not same, but payment bank is using the technology of fintech.
Okay. Thank you, sir.
Thank you. I think somebody else also raised the hand.
Smita ma'am?
Yes, ma'am. The feedback link has been posted in the chat box. Ma'am, could it be posted?
It has, I guess. Yes, ma'am.
Okay. Dear participants, we request you to kindly on your videos for the photographs. Yashaswini ma'am, you can make announcements regarding the feedback link.
Okay. Participants, feedback link has been posted in the chat box. Kindly fill in the feedback link within 10 minutes, followed which your certificates will be sent to you all after the 5th day of the program within 10 working days through email.
So thanks a lot for the opportunity. I enjoyed the session.
We did too, sir. With this, we come to an end of a wonderful session on FinTech, Evolve to Revolve. I humbly thank Dr. Subramanian M for enriching us with his words of wisdom on FinTech. Thank you so much, sir. I take this opportunity to thank all the participants for being with us today. We request you to kindly log in by 2:45 p.m. tomorrow for the day's 2 session of the faculty development program on revisiting financial literacy. So we request to log in by 2:45 p.m. Thank you all. Smita ma'am, is there any other announcements that needs to be taken?
The link for day 2 session will reach you through email. So you can use the link for day 2 and join the session tomorrow.
Right.
Thank you all. See you all tomorrow.
Thank you. Thank you.
Thank you.
Yeah.
Thank you, sir. Thank you so much, sir.